Hi, welcome to this video. Date Sunday, 4th February. We're going to be looking at two high odds trade setups today. They're going to be USD CAD and USD ZAR. Both trade setups, in our view, offer fantastic profit potential against the risk taken. Also, in terms of this trade setup or trade setups, they're going to be right or wrong pretty quickly. Now, in terms of this video as well, what I want to do is after I finish doing my chart analysis, I want to come back and discuss taking losses for beginners. Now, in terms of us beginners, they come in and they say, yeah, I'm going to cheerfully take my losses and keep them small. I won't get disheartened. I'll stick to the plan. It doesn't quite work out that way for the majority. They can't take it psychologically. I just want to go through a different way of seeing losses. I'm not talking about the traditional way of, you keep your losses small and the profits will cover your losses. Just a different way of seeing losses and treating them. And I also want to go through what I'm going to refer to, and I've taken it from one of the great sportsmen of all time, learning the art of the Suzy Q. Now, in terms of the Suzy Q, it's all to do with catching big trades and also knowing how much to put on the trade. And in terms of one of the best ways to increase the profitability of any strategy, in my view, it's knowing when to gear up. Okay, now I'll come back to that later on, but let's first of all do the chart setup. So I'm going to start with USD CAD.
Right, we're on the chart of USD CAD. I'm just going to draw my levels in a moment and just go through the trade setup. But first of all, I just want to look these notes up in the top left-hand corner. Now, in terms of this setup, yeah, I mentioned it in a video last week and yesterday. Very bullish of USD CAD. Now, last week's video, we looked at the trade setup. It didn't come to fruition. It has come to fruition now. And we noted the sentiment and fundamentals towards the USD. COT commitment to traders, speculators and commercial hedgers. We noted speculators selling the CAD hard, commercials buying it hard. Rate of change was increasing. This week's report shows the same. They're going against each other. And we think the commercials are going to win. It's not the biggest divergence on the COT, but historically it is. So that lends weight to our bullish view of the USD. Also been saying since really last Wednesday, we've got really bullish of the USD, looking for it to turn up. On Thursday, for anyone in our member centre, I listed out just about every bullish fundamental for the USD, which I believe the market wasn't seeing. I mean, the USD had a huge amount of bullish news on Thursday, but look at her. She finishes soft down here. Okay, she's off this tail, but a weak close. We need an event trigger. We thought that'd be non-farm payroll. Up she comes. Now, in terms of, obviously we're bullish of the USD, but you want to pick out a currency on the other side to trade against that has got weak fundamentals or bullish fundamentals that are peaked. There's plenty of majors you can choose from. In yesterday's video, I outlined GBP USD, where I thought, British pound fundamentals have peaked, the bullish ones, and same in terms of the CAD. There's two sides to a pair, so we're looking at obviously the outlook for both currencies. CAD sentiment. Basically, the market is just too bullish. The Bank of Canada hiking rates. They see several hikes this year, and one coming pretty quickly. It isn't going to happen. Why? Bank of Canada cautious. They've got NAFTA trade talks that Bank of Canada don't think they're going to end well. That's bad news for Canada. They've got a tightening of monetary conditions. A firm CAD hurting exporters. Also, they've got US tax legislation to think about. Corporations that would normally be pushing money into Canada are not. They're keeping it at home for obvious reasons. That's not good news. Then they've got the minimum wage, recent legislation thinking about mortgage rules. How are they going to impact the economy? How are the three previous rate hikes they've done going to be impact? Bank of Canada, they're not going to be raising rates in the near term. Also, crude oil. I noted this in the video yesterday. It's been like a freight train to the upside. but we think that freight train is about to hit the buffers. Yeah, we think we're very close to a breakdown in crude. That'll obviously weigh on the CAD. Also, we had stocks sell off on Friday. Yeah, that's not good for risk on. That's risk off if we follow through. Yeah, with stock market weakness, yeah, the USD is going to appreciate more than a risk currency like the CAD. Right, now let's go to the setup, which is really just a high volatility candle and a 20-day MA break. Okay, what you do is you buy follow through, or if it drops back, wait for a retest and come through. Yeah, on the retest. So you want to buy strength, is what I'm saying. Now, why I like this setup, basically we set our level just above the 20-day moving average. Okay, and also what we like is that 20-day moving average is very tight to a round number. Okay, round numbers are very significant because basically there's always a battle. There's always lots of orders around there. So sometimes, yeah, you might just see a round number. Candle is rejected. This one has not been. It's basically come through the round number. Okay. Now, in terms of our view, we were waiting for the trigger from non-farm payroll. We dropped a small trade in, take advantage of it. The main portion of our trade comes in as we go through 124.25, and we're just sitting above that level at the moment, but off the high. So if you want to come in straight through the high. You've got double trend line support at the round number. You've got the 20-day there as well. You're looking for her to run. Okay. Now, because the USD is at such a bearish extreme, a lot of pure technical analysts will see there's some resistance up on these tails, say, about 125.80. Because, we're turning after a bearish extreme. We're looking for follow through. We don't think the USD is going to stop there at all. We think it should aim up for 127. And our longer term reading of the fundamentals, which is very subjective, of course, because it's just our reading, basically points to a move up to 129. So she goes through the high for fresh positions. She's a buy. Aim for 127. Obviously, you manage the trade as she goes, or you can follow us do this trade in the member center at the minute. Our stop is well back. Okay, but I'm going to bring that up. I think really, you can say that level there would be a good level to have your stop behind. So you've got a couple of bodies there. That body failed, that body tested, that tail tested, down, bang, she goes through it. So I suppose that's about 123.40. So if she runs onto the upside, I think she'll keep running to the upside. And your risk to reward is very good, just the first target. Obviously, this is a subjective view of me. Obviously, the real risk reward of the trade, we don't know, do we? It has to be a subjective way of looking at things. All you can do is protect yourself against loss. You don't really know how much profit you're going to make. What I would say is, this trade setup we've executed for, 25 years, and it will get the odds on your side. Obviously, you'll lose a lot of trades doing it, but the ones you get, you'll more than make up for the ones that you lose on. So, it's a very simple trade setup. The 20-day MA giving way. Very often, after you've had a bearish extreme, like got the USD, you get follow through to the upside. If you do, that's great. If you don't, you get stopped out, but it isn't too much of a loss. Right, now let's look at a pair which I think has got such a fantastic risk to reward on it, which is USD ZAR. We are on the chart of USD ZAR. Now, if you've got a bullish stance on the USD, okay, which obviously we have, the currencies that are going to get hit hardest are the weak credits, okay, not the majors. So if this, if the USD breaks up here, then the move will be bigger than in USD CAD, because when the dollar was at a bearish extreme, and a lot of people I'm sure will argue it's probably still going down, it might, it's the weak credits that do well. Why? Well, the ZAR, for example, has got a very good interest rate on it, so institutions can sell it, big managed money, the dollar goes down, they're obviously picking up the carry as well. So it's an attractive trade when the dollar is weak, okay? But, it's a weak credit. It's a commodity currency. We already think commodities are going to, basically turn down. And what I like about this is the actual size of the move, okay? The weak credits, pushed the USD down further than, let's say, a major like the USD CAD. So, it should snap back even harder in our view. We'll obviously have to see. The setup is similar. It's like, high volatility 20-day MA snap, but I want to look at the length of the holding period, okay, of the 20-day MA. Now, before I draw my levels, I'll put up the CFTC net traders positions in terms of how the non-commercials and the commercials view the ZAR. Right, non-commercials 11,348 long ZAR positions, obviously short USD. Their shorts are only 2,602 on the ZAR, okay? But what I like about this is there's hardly any change this week at all. Not much movement of positions. And you've got, basically the non-commercials bullish the ZAR and bearish the USD by, what are we, it's about 5 to 1, just under 5 to 1 in terms of their ZAR bullish bets over bearish bets. But no real change this week. Now, I personally think that indicates that, speculators have sold as much as they're going to sell at these levels, all right? So there's no more sellers coming in. What we're looking for is a move up in the USD to take the stops. Commercial hedgers, they've got obviously just 203 long ZAR contracts, 9,429 shorts. They added no longs, just a few shorts. The commercials basically at one stage had no longs at all. But the divergence is just so big. It's still near the biggest divergence in the history of the COT. Okay, so we're looking for the stops to get run of the non-commercials. And for us, it's an attractive trade setup. And what I like is just how long the 20-day MA is held. And if you look up here, we drop through it. Test can't get through it. Test can't get through it. Again, tumble down. These candles come up. They can't quite reach it. This one is coming up to it. So you've got a good few months where the 20-day has held. Okay, now if it breaks, and we know what's behind the chart, we hopefully will see follow through to the upside. And I also like this, as we've come down here, the candles are getting smaller and we're hammering out a support zone. Okay, so what we've got now is this candle here should come up to test the 20-day MA. Now, is she going to break? Going with this one, we've come in a little bit early. We like to be aggressive, but the main portion of the trade will come in. We want to add in, just be above that 20-day. We just want a clear break out of it, and we're not going to wait too long. Keep in mind, we're already long. We're just looking to gear up a bit here. I think, just get clear of that 20-day MA. Body, body, tail, tail. And then see if she runs. And I'd have to stop back behind the support zone here, then see if she runs. Then you can bring her up a bit. Where could we run to? Well, with all this in mind, like the COT and what we've said about the fundamentals, up here, I think that's achievable. Okay, that, if it comes to fruition, of course, my view might not come to fruition. I think, it would be a great risk-reward trade. Actually, if we do break up strongly with a blue candle, then you probably drop in your stop a little bit tighter. I'd probably go, sorry, let me just draw a trajectory, and I think I'd go for these two bodies here. So you can bring your stop up a bit, okay, on, follow through. Nice strong close. So let her go through, see if she follows. when you place your order, I'd have my stop back here personally. If she starts to run, bring your stop up. Yeah, you can see if it's a nice blue candle. If you don't like the look of the candle, it's not strong, you can always come out and have another go. For me, yeah, I was saying it in the video yesterday, I've got exposure in terms of USD longs in the majors. CAD and GBP are my favourites. I had AUD, but dropped the exposure there because it's obviously fallen a bit. This one, I like the NOK, mentioned Mexican peso. There's a good few minors you can choose from. You don't even have to have big size on these. Okay, I know you pay a little bit more on the pip spread, but this is if it gets moving, the profit potential, you'll easy cover your spread. You don't need a big position, just a small one. Your risk reward, in my view, is so good. Obviously, you've got to manage this trade as you go, and you could say there's some resistance around here. But the way these COT net traders look and the way the dollar's coming off a bearish extreme, you've got to manage the trade. But I would just be aiming for up there. Where is it? 1340. So we'll see how this one goes as well. And now I just want to talk a little bit about viewing losses in a different light. I'm just going to do a very short intro, and then I'm going to discuss my views in more detail. Here's the intro, and I'll be back in a moment to discuss.
Well, last night I fought a real true champion in Jersey Joe Walcott. He proved to me what a champion is made out of. I only hope that I could be as good as him.
I will come back up that short clip there of Rocky Marciano. Now, I'm sure a lot of people watching are thinking, actually, Andrew, has Rocky Marciano got anything to do with Forex trading? Well, I think a lot of people probably think not. I personally do, actually. So I'll explain for those of you who want to, carry on watching this bit of the video. Now, if you adopted his thought process from the beginning, you wouldn't see losses as losses at all. You'd see them as your route to winning. And I just want to quote a very famous hedge fund manager on this, name of Larry Hite, who used to run the Mint Fund, okay? He said, I actually don't see, profits or losses or individual trades at all. All I see is risks, rewards, and money. The process, okay? Now, in terms of Rocky Marciano, obviously at the beginning of that clip, you see him throw that devastating right hand, the Susie Q. No one is going to get up from that, all right? Now, when he steps into the ring, does he expect to throw that in the first round or the second round? Well, he might, but he's going to have to take a lot of punishment before he can do it, okay? That's what happened in that fight. You can see, obviously he did have a little bit of damage when he was speaking at the end. He's not seeing, being hit as a loss. All he's doing is seeing the process to go in and throw, the devastating punch. And this might sound kind of obvious, but it isn't obvious to most beginners. They will always personalise losses, okay? Get disheartened by them. Just don't see them as losses. Losses are your route to profit. You've got to get hit in a boxing match. If you don't get hit, you're not going to get close to your opponent to hit him, are you? Now, in terms of the Susie Q, it has been thrown from very short range. And Rocky Marciano was a tiny heavyweight. He had to get in close to his opponent. Now, in terms of does that relate to my Forex trading strategy, I personally think it does. If you look at those two trade setups that we just looked at, basically, I'm coming in close. I want a very tight entry, okay, to my stop. Now, majority of the time, it won't work. But the minority of time that it does gives really big profits, okay? Now, in terms of being tight with entries, I often think that a lot of beginners, when they come in the markets, they read all these textbooks and the way you should do it, and they wait for too much confirmation. They do what everyone else does. Our own view is nothing wrong with coming in early. You're not trying to buy the bottom on those two setups. It's not that'd be like a boxer just putting his head out without protecting it. You're getting confirmation, but you've got great risk to reward. yeah, sure, you get hit a few times, but the few times you get it right, you get a lot of profits. Now, in terms of probability, in terms of, yeah, when you see, sorry, I forgot what I was going to say, a high probability that you are going to win, you need to go for it, in my view. You need to gear up the bet size. Static bet size doesn't maximize gains or keep losses to a minimum in Forex trading. You need a variable bet size. If you're having a really, really bad period, you keep your bet size small. When you're having a good period or you're really confident, you increase your bet size. And yeah, if you think that isn't true, go and read up on Ed Thorpe, because Ed Thorpe actually goes through this in great detail. If you're trading a probability game or playing a probability game, be it blackjack or Forex, just probabilities, variation of bet size will maximize your profits without exposing you to more risk. In fact, it will limit your risk. Now, in terms of, I wouldn't recommend beginners do this. You have to get used to your strategy, okay? And basically develop gut instinct. It's like, you know, Marciano was always seen as some sort of just kind of brawler. He was a man who practiced intently. He had a strategy. It may not have been pretty, okay? You know, he's not Muhammad Ali or anything like that, but it was deadly effective. He practiced the same things over and over and over again. He didn't kind of vary what he did, okay? Very used to what he did, just executed it. And I think, you know, if you're going to gear up your bet size, you have to be totally confident in your strategy and its edge, and then your instincts will tell you when to gear up. Now, from my perspective, I think I said it yesterday in a video, January, I consider that a horrible month. That was the worst month I've had in a long time. Yeah, I was taking numerous losses. Yeah, trades I did that one didn't win very much. Other trades I did just didn't do anything at all. They just kind of hung around. And yeah, you get those periods, but like I said, it's a process. Once you're used to your strategy, I think in terms of, like, if you're trading the COT, you are going to get a lot of losses. You're going to be wrong. Yeah, get flat periods or whatever. But you do get the chance to do the big hit. And for me, I might have said it in the video yesterday, that came on Thursday. Dollar for me, turning bullish. You know, just basically the perfect storm brewing for non-farm payroll. So I can really ramp up the trade size that I do, which I did. And basically, great profit in a day, which is very unusual for me. I can then slim back, you know, get some money back in the bank, and then wait for next week. Well, we'll be starting very shortly, and then see if I can go for it again, if, you know, the conditions are right. Now, in terms of Rocky Marciano, I did put, you know, understanding big boys rules. And, you know, if you're in a boxing match, you're on your own, there's no hiding place, okay? It's the same in Forex trading. There's no hiding place, okay? And a lot of traders, yeah, beginners in particular, they'll make every excuse they possibly can of why things went wrong, and it's never their fault. I get lots of people, funny enough, watch my videos and blame me if they lose. You're lost on your own, okay? We all have to take responsibility for our own actions. That's the way Forex trading is. I mean, I'll take ideas from other people, but if I do them, then that's my trade. It's no one else's trade. And I think, yeah, if you come into Forex trading, accept it. It's big boys' rules. You know, I think, yeah, in terms of the way we are in society today, a lot of people want to hide away. Yeah, they don't want to be on their own. Well, if you don't be on your own, don't bother trading Forex. And also, I think another thing you can take from Rocky Marciano was, okay, he was an absolute animal in the ring. He's a real gentleman outside. Yeah, he's a very humble guy. You can see him there giving credit to Jersey Joe Walcott. Yeah, he was very modest, humble. Yeah, he wasn't arrogant. Yeah, he wasn't full of himself, let's say. Too many people come in the markets as beginners. they're full of themselves. They think they're just going to walk in, make a load of money, and they get the reality check. It isn't like that in Forex trading. Forex trading, suits people who like to take responsibility, like to take risks, see Forex trading in the right way, and are generally, humble people. Not arrogant. They treat the market. You treat your opponent with respect. The market needs to be respected. However, the market, in a way, can be your kind of friend because you can get money out of it. Just don't get too cocky. Keep those losses small. Focus on the process and try and throw the Susie Q when you can. Anyway, that's my view. Thanks very much for watching me. Take care. Have a good day.